Good morning, everyone. Morning, ladies and gentlemen. Welcome on behalf of the Jamaica Chamber of Commerce to the release of the third quarter 2020 Jamaica Chamber of Commerce Business and Consumer Confidence Indices. I am happy to be here. This is our second virtual presentation of the consumer confidence results. It has its advantages in that we have a wider audience. We're able to accommodate more people, more participants than we would have otherwise. So we're happy to have you here. And again, thank you for being here. Welcome to the participants joining us via Zoom and also on YouTube. Special thank you and recognition to our sponsors, NCB Group, National Commercial Bank, and NCB Capital Markets. We are thankful for their continued sponsorship and continued interest in the importance of this event. From NCB today, we have Tanya Algrove, Assistant General Manager, Corporate and Commercial and Consumer, and she will be making a presentation shortly. Also, Ms. Anya Walker, Vice President, Strategy, Research, and Structured Products at NCB Capital Markets. Our special panelists today, we are very grateful that they accepted our invitation to join us today. Hugh Johnson, the immediate past president of the Small Business Association of Jamaica. And we certainly look forward to his perspective on business and consumer confidence. And none other than Mrs. Therese Johnson. Therese, the country representative, Therese Turner-Jones, country representative, Inter-American Development Bank, IDB. And certainly we know that the IDB is a very critical partner in our economy, and we look forward to Therese's input as well. Therese Turner-Jones, country representative, IDB. And of course, none other than Mr. Don Anderson, Executive Chairman, Market Research Services Limited, the organization who, on behalf of the Jamaica Chamber of Commerce, conducted the research. And he will give you a little background as to the methodology for the research and then share the results as well. Just a little housekeeping. Questions and comments can be facilitated via the chat room. And at the end of the presentation, we will have a panel discussion, and you can also put in your questions there. You can either direct your question to a specific panel member, or anyone on the team who you believe will be able to provide clarity. And you can send directly to me if you wish, and I will certainly ensure that as many of the questions as possible are answered. So without further ado, thank you all again for joining us on YouTube and on Zoom. And thank you to our sponsors, National Commercial Bank, NCB Capital Markets Limited. At this point, we will hand over to our sponsor, and we will have a presentation just ahead of the release of the results. Presentation by Tanya Algrove, Assistant General Manager, Corporate, Commercial and Consumer Banking, National Commercial Bank, Jamaica Limited. Over to you, Tanya.
All right, thank you, Andre. I'm just going to share my screen here.
Okay, we're seeing it.
Okay. All right. So I'm going to, in effect, go ahead of Don, because obviously in our presentation, we would have taken into account some of the findings from the survey obviously we're going to be pulling out sort of some key takeaways. So, but obviously Don would be going into the detail, correct? So here we go. So one of the findings that we're seeing from the survey at a very high level on the consumer side, we're seeing a very low level of optimism amongst consumers. They're indicating that they have concerns about prospects for business recovery and by extension, jobs and income, as the uncertainty has grown about the duration of the impact of COVID-19 given the recent spikes. You'd have seen from the last survey that there was a little bit more optimism amongst the consumer base, as they had a sense that the management of the pandemic was such that the duration of the impact would have been relatively short. What we're seeing now is that there is a little less optimism because they're seeing that the spike is going to have an impact which is going to extend the duration. And clearly there's a concern there for jobs and income. But importantly, getting the virus under control has been seen as their key concern, their key area of that they've identified that this is what is going to be critical for getting things back on track because of the impact on jobs and income, but also on health and education and getting the kids back into school. On the business side, we've seen where business confidence has in fact declined further as the fallout from the impact of the pandemic and the recent spike has extended the level of concern that businesses have. And they've shifted into sort of a long haul survival mode. Revenues are down, profits are down, there's reduced business activity, and there's low consumption driven by job losses and uncertainty. And there's a wait and see approach for capital expenditure. I think what is interesting here, though, is that despite the negative impact, most businesses believe that they will survive the COVID-19 period. And some of that seems to be driven by a better understanding of how to coexist with the virus, but also understanding that many businesses have had to shift their operations and identify new sources of revenue and alternate ways of operating. You know, the initial shock, was the impact was quite stark. But as people have understood that this is going to last longer, what businesses have clearly done is identify that they're going to have to find a new way of operating. There's an expectation that the next 12 months will remain difficult. However, many businesses expect recovery in 1 to 3 years. And importantly, many of them believe that they will survive. Again, managing the spike and managing the virus and controlling the spike has been seen as a critical element in terms of being able to get the economy back on the right track. So what are the key takeaways? Now, the challenges presented by the pandemic have been unprecedented. And we're seeing the greatest vulnerabilities really in the small and medium-sized business sector. For very obvious reasons, the small businesses tend to have less capital and less cushion to be able to survive external shocks. Notwithstanding, businesses have been able to demonstrate a similarly unprecedented level of resilience and resilience and adaptability to survive. Now, what are they doing? They're developing new revenue sources and lines of business, adapting to new operating models and strategies, and adopting digital strategies. Now, from where we sit at NCB, we are taking a proactive approach to supporting SMEs as they adapt to the current environment and position for the future. So what is it that we're doing to support the transition? NCB has a wide range of products, services, and programs to support SMEs as they adapt and transition their businesses. And it runs a gamut from funding options specially designed for SMEs, partial guarantee programs, technical support, capacity building programs, and products and services supporting enhanced sales capabilities, service delivery, and operating efficiencies. So some of those would take the form of specialized funding support. Now, I just want to highlight that, we have in fact put out there a $20 billion funding pool at 6.5%, especially especially geared towards SMEs. Only SMEs are eligible for this funding. And it's to support in retooling and building business resilience, but also supporting innovations and shifting operating models and ongoing operating support. In addition to which, we have a wide range of secured and unsecured funding options with relaxed payment terms. We've also reduced rates and also provided reductions in fees to allow for better accessibility of the funding for SMEs. But in terms of transitioning their businesses, some of the key elements would be, how are you changing your operations? So I would say that these fall under sort of two big buckets. So we have a range of digital options which are available to SMEs, but also to businesses of all sizes. One of the things that we've found with SMEs is that they don't have the ability, like some of the larger businesses, to invest large sums in, for example, website development and large infrastructure projects. So what we have done is that we have developed a range of convenient and cost-effective digital payment and e-commerce options for businesses of all sizes. So whether that be payment buttons or different invoicing solutions. So if you're a large business, you may go one route for e-commerce and digital payments, but we also have options to cater to SMEs who don't have the same level of funding availability to invest in large infrastructure. We're also providing a lot of technical and capacity building support programs, which would include enabling technical and capacity building support as businesses try to ensure that they have a better understanding of their business, also support them in building out their business plans, financial reporting, and also to try to develop better operational sustainability. Moving your business online, we have a lot of support provided in the back end for people who are trying to move towards those digital spaces, but maybe don't have some of the internal know-how. And we've also been supporting in hosting and sponsoring a range of SME training programs, seminars, and expo. Fundamentally, NCB is committed to playing our part in supporting SMEs as they adapt and transition to stronger, more resilient businesses. And this bodes well for our economy and recovery of jobs going forward. The theme that we have here is that it's in times of difficulty and crisis that innovation thrives. And it is our role at NCB to support that innovation as we transition to a new economy. And I'm going to hand back over to Andre. And thank you for your time this morning.
Thank you very much, Tanya. Very good presentation. I think the takeaway there is that the public should stay in touch with their bankers and let them hold your hand and assist you to walk through these challenging times and assist you to, what's the word, Tanya? Pivot?
I tried to stay away from pivot.
Yes,
on this one.
Indeed. But certainly
to adapt and thrive.
Right. The best thing you can do is stay close to your financial institutions, NCB, to ensure that whatever is happening in this economy, that your financial institution can be aware of what is happening in your circumstance and direct your course. So communication is key. Thank you very much, Tanya. That's Tanya Algrove, Assistant General Manager, Corporate and Commercial Consumer Banking for NCB. I'm now going to call on Mr. Anderson to give us the official presentation. I see several members of my board of the fellow directors of the Jamaica Chamber of Commerce online. I see members of the press online as well. Thank you all for joining us. And I will now hand over to Don Anderson, who will share with us the results of the third quarter Jamaica Chamber of Commerce Business and Consumer Confidence Indices.
Thank you very much, Andre. Just want to say welcome to all the participants this morning online with us here and those who are joining YouTube and elsewhere. Let me just give you a background to the survey in terms of the fieldwork. Always important to give you the context within which all this data is being presented, generated, and presented. So we did a national survey, national sample of approximately 660 persons that we interviewed from the general public perspective. And we did about 117 companies from which we then generated data on the business component and the business confidence. So we have two bites of the cherry, so to speak, from the public, the consumer confidence, and from businesses in terms of business confidence. So what I'd like to do now is to begin to share the screen and in fact, take us through the presentation. And I want to thank Tanya, first of all, for, I believe, a very good breakdown, good summation, really, of the findings. And I think it's really important that we make note of that because she did in fact summarize this extremely well and has actually made my job a little easier. Thanks, Tanya. All right, so the first piece of data that I want to share with the audience is the trend in consumer confidence. And we can see that this is a survey that we have been doing since 2001. So we now have a bank of data, significantly long and very detailed bank of data, over 80 quarters of data that we're actually looking at. Obviously, from the perspective of what is current, we're going to focus on 2019 and 2020. And on occasion, we will fall back to 2015 just to give you the kind of trend that we have been plotting over the last 5 years and so on. So what we're finding is that the consumer confidence index has continued its downward trajectory. It's reached its lowest since Q4 of 2015, as it is now down to 130 points, which we need to make note of. It's down from 165.2 points in Q2. So we can see by that extreme line to the right of our charts, that significant fall off in consumer confidence over the last 3 quarters in particular, and dramatically since the second quarter of 2020. That is very clear. We can see the pattern, and we just want to make the point that those spikes you see in the trend data represent election years, really when optimism grew significantly and fell off immediately afterwards or some 6 months afterwards. We see from 2015 onwards a bunching up of the data, the confidence data, at a pretty high level. But in the last 3 quarters, we have seen a dramatic fall off in consumer confidence as a result of, as we will see, the challenges that have been posed by the pandemic. So that's perhaps a very important chart as a backdrop to what we want to look at. So let's now look at that trend that I just made reference to. It's a 5-year trend from 2016 up to 2020 year to date. We can see that in 2016, the consumer confidence was 151.7, 147 in 2017, 166 in 2018, 180 in 2019. So we saw a good progression of improvement, increases in that confidence level between 2017 and 2019. That year-to-date average is now 156.1. which means that there has been, as we indicated, a dramatic fall off in the level of confidence that consumers repose in what's happening around them in terms of the economy, okay? So we want to look at how consumers view the current environment, economic environment, and basically how they view what are the expectations in terms of the economy. So the index of current economic conditions increased slightly from 138 to 135, or up to 138 from 135 in Q2. Since Q3 of 2018, consumer confidence in the economy reached the 200-point mark, with the highest index ever recorded in the history of these surveys at 222.9. You'll see that. Despite a slight uptick in consumers' views of current economic conditions in the third quarter, as we can see by a very small tick to the right of our chart in that red line, slight uptick, which means that the consumer confidence picked up a little bit over the last quarter. Overall, it does represent a really dramatic fall off in the level of confidence that consumers repose in the economy. What about expectations in terms of the economy? they are not really optimistic at this point in time. Consumers' expectations about the economy has declined from 175.2 points in quarter two to 127.8 points, the lowest since 2017. Consumers' pessimism about the future economy is driven by their fears about the impact of COVID-19. 65% of consumers who anticipate that the economy will get worse over the next 12 months indicate that this is the basis on which they are making that kind of assessment. Okay. So we want to look at what this all says: current conditions, current business, and current jobs. There is a pretty high degree of skepticism about what's happening right now. When you look at how consumers perceive current businesses, 30.1% of them think that current business environment is bad, 59.3% average. So we have just a very small percentage, 11% to be exact, who believe that current business conditions are good. I want to fast forward to the next chart and I'll come back to this one. So when you look at what they're saying about the business and the expectation in terms of business, 29% of those persons we interviewed believe that things will get worse before they get better. But 37% say it will stay the same, and 34% believe that things will get better. Well, you may want to take the position that if you're at such a low ebb, then things can only go upward. And this is probably what is being indicated here. 29% believe that despite where we are right now, things are going to get worse. 37% believe it will stay the same, but 34% believe it will get better. So that, in a way, is a good takeaway if you wish. Let me go back to the previous chart and now look at how they feel about jobs. From the inception of the survey, we have established through the data that consumers are very, very low key, very, very pessimistic about the supply of jobs, understandably. So when we did the current survey, it indicates that 76% of all persons that we interviewed from the consumer's perspective believe that jobs are in short supply. 21% believe that jobs are adequate supply, but only 4% believe that jobs are plentiful. So this is really a very negative perspective from the consumers, but this has been the pattern over the period of the 20 years that we've been doing the survey. So what are the expectations? 36% believe that the situation is going to get worse. 35% that it will stay the same, and 29% that it will improve. So again, consumers are expecting some degree of positive change, but from where they are right now, one would not expect this to be a dramatic improvement in the jobs availability, and therefore jobs are not plentiful, but they believe that things will improve. So it's very important to note. So we then asked those persons who said things were better or will be better, what the basis on which they're making this kind of assessment and conclusion and drawing this conclusion. The four main points that were presented by them. In the first instance, they said they believe the pandemic will be contained and will be controlled. They talk in terms of government efforts and plans, so they're lauding whatever government is doing right now to ensure that things change for the better. Thirdly, they believe that people will learn how to live with the virus by then. We're not quite sure how long, except that some people think that this will be with us for another 1 to 3 years. So people will learn how to live with the virus by then. And fourthly, that the economy will reopen and things will bounce back. So these are the bases for which they're optimistic about what's going to happen in terms of businesses. And we're talking still about the consumers. But remember that if we back up there, that 36% of the consumers we interviewed believe that things will get worse even. What's the basis? They believe that COVID will have a lingering impact on businesses, that there will be fewer jobs and that more people lose their jobs, one and the same. And as a result, people will have less disposable income to in fact take care of their day-to-day needs. So these are very telling charts, I believe. It talks to you in terms of the fact that consumers who were very buoyant, very, very buoyant up to the middle of 2019 are now very, very concerned about what's happening in terms of businesses and as a result in terms of their likelihood of picking up jobs in the future that will help them to improve their disposable income. A pretty dire situation, if you wish, because consumers have been very buoyant very, very buoyant up to the middle of 2019. But in the last quarter of 2020, we saw a slight dip, and that dip has been accelerated into a pretty dramatic fall off in the confidence level that consumers repose in the economy. I want to shift now to look at business confidence. And there is a similar fall off in the level of confidence that businesses repose in the economy and in their own companies in terms of their profitability, in terms of their finances. And we can see that it declines significantly so, and there has been over the last 4 quarters a gradual and now accelerated decline in terms of how businesses see the situation for themselves and for the economy. Business confidence had reached a peak in 2019 of 151.3. Since then, there has been a steady decline on business confidence, down to 109 in Q3, and this was down from 115 in Q2. We want to show you maybe right away what that pattern has been over the last 5 years. We can see that in 2016, business confidence was 142, rounding the numbers. In 2017, that fell to 139, back up to 141 in 2018, down to 140 in 2019. So if you wish, it was averaging around about 140 since 2016. Pretty steady, as we said, bunching up at a pretty high level. In the last 3 quarters, which we have averaged for 2020, that fell to 122.2. So we can see that there has been a very noticeable, and if you wish, a dramatic fall off in the level of confidence that businesses repose in the economy and in their own future. So let's look at what this means in terms of the respective indices. We can see in third quarter 2019, that was 170. Fourth quarter, 149, rose to 157 in the first quarter of 2020. But since then, dramatic changes. 100 in 2020 second quarter and 109 in third quarter 2020. So you may say, yes, there had been a 9 percentage point increase in the index between second quarter 2020 and third quarter 2020. But when you compare that to where it was in 2019 at 170, that really represents a very dramatic fall off in the level of confidence that businesses repose. What are the expectations? We can see that falling off from 130 in the third quarter of 2019 to 109 in 2020 third quarter. So that we can see that businesses are not only now representing and reflecting a recognition of the challenges that they face, but again, they are not really all that optimistic. They're less optimistic about that changing for the better in the short run. So we want to look at this in another kind of format, if you wish. 49% of all the businesses that we interviewed, and we did interview 117 businesses across a pretty wide spectrum of the different types of industries. 49% thought that the profit situation was worse than expected. 32% said just as expected. And very importantly, 19% said they believe it was better than expected, right? But one of the key questions that we always use to measure how businesses really feel about the situation is the propensity and the likelihood that they would invest and expand their businesses by either capital injection or what. Well, over the last 2 quarters, we have seen virtually a reversal in how businesses feel about the investment climate. 55% now believe it's a bad time to invest. 6% said they didn't know. But 39% down significantly from what we used to measure, say, in 2019 and before. 39% said it's a good time. But that is a dramatic fall off from what it was in 2019, where over 50-60% of the businesses felt it was a good time to invest. They were bullish about the economy and felt good time to invest. That number has fallen to 39%. And correspondingly, 55% don't believe it's a good time to invest. It is, in fact, a bad time to invest. So again, very critically important signals being given by the business community. So what are the expectations then against that background? it probably is difficult to separate expectations from hope in this particular case. But let's look at the data. Most importantly, 57%, 58% of the businesses that we interviewed believe that the economy will get better. 50% believe that their firm's finance will improve. And 42% believe that there will be improvement in profits. So that businesses are, despite what the current situations are reflecting, businesses are pretty optimistic that things will change for the better. Pretty optimistic that things will change for the better. So we did an evaluation, therefore, of the reasons why they do say so. Why are businesses feeling that things will get better generally? One, they say people will become more educated, or they will be more educated about how to coexist with the virus, how to manage their businesses under this blanket of the pandemic. They believe a vaccine will be found, which will be available, and therefore that will change the scenario. Over and above that, they intend to diversify. They intend to go into other products and they diversify their businesses so that they can capitalize upon whatever improvements there are in the economy. In addition to that, they will be introducing new marketing strategies, new internal strategies to, in a way, capture more of the market. And they believe that from all of that, there will be a greater demand for their products and services. So that's as far as their own reasons as to why the situation will change for them for the better. But remember those, when we just want to reflect on it. In that red, we had 22.9% who believe the economy was going to get worse. 18% who believe that their firm's finances will get worse, and 22% who believe that their profit situation will worsen. So why is this? What are your thoughts? They believe that the impact as well as the uncertainties associated with COVID-19 will definitely negatively impact their businesses. They also feel that because they'll be forced to cut jobs. We talk in terms of the instability of the dollar, and this is something that we have addressed in previous studies, where not so much that the dollar is devaluing by itself, which it is, but by virtue of the instability, which means the fluctuation in the exchange rate, which makes for very difficult planning. As a result, they will believe that there will be loss of revenue, loss of disposable income to obviously take advantage of the goods and services that they will provide, and as a result, less demand for the products and services that they will be providing and offering to the general market. So in a nutshell, we can see that businesses are in a way, recognize a very difficult situation that they're facing and that they will face, but there's optimism amongst what appears to be gloom. There's optimism that things will change for the better. So let's look at what the last 12 months has meant for businesses. Return on investment. Only 19%. We don't like to be judgmental by saying only, but it is the lowest level here. Believe that what happened over the last year was better than they expected. 32% said it was, just about what we expected, but almost half, 49% said what happened over the last year in terms of a return on investment was worse than expected. Very significant. So it just confirms what we have been talking about in terms of how businesses feel about the economy and their own businesses. So a question that we have introduced over the last couple of quarters is, so those of the businesses that are inclined to so invest, we've asked them, well, what is the industry that you plan to invest in? And we have here 8 different industries that we have plotted over the last, I believe, 3 or 4 quarters. And it is important to note that agriculture, which has been talked about consistently in the government circles and in the media and publicly, that agriculture is the one that stands out as the area in which the businesses believe that it is important to invest, those that think it is a good time to invest. 44% in farming and agriculture, including mining and quarrying. The other one which stands out by virtue of the number, the percentages, wholesale and retail. where 40% believe that this is a good area to invest in amongst those, remember, very small percentage, relatively small percentage who believe that it is a good time to invest. But interestingly, if we look at all the others, we will see that none of them really stands out significantly. And if we look at the bar to the right in red, we will see that in every instance, there has been a fall off in the likelihood or the intention to invest in that particular sector. And the lowest represented here is, again, in terms of the farming and agriculture, which falls by 7.2 percentage points. But what it says is that businesses are not convinced it's a good time to invest. We said that earlier, but that when you look at these particular sectors, that agriculture followed by wholesale and retail were the ones that, if you're going to invest, would be the ones more likely for them to invest in. So we want to pull the two sets of data together, consumer on the one hand and businesses on the other, and we can reflect upon this over the last 5 years. And we can see certainly in the last 2 years, 2019 and 2020, that for both the consumer represented in blue and represented in orange or whatever is that color, but businesses represented in blue has fallen off, as we said before, from 139 in 2019 to 122 in 2020 year to date, and similarly consumer from 180 to 156. So whilst that situation between 2019 and 2020 is of course cause for concern, when you look across the 5-year period, it actually is a probably, if you wish, an improvement overall, certainly on 2015. And therefore, if you wish, you may want to take some comfort from that particular position, but I don't think that that would be a good idea. The fact is that where we are right now represents a cause for concern, and happily, businesses and consumers do expect some amount of change, but again, not in the short run. So very important to note that the situation does represent a current situation where there are challenges being faced by both businesses and consumers, and they reflect that in the level of confidence that they repose in both businesses and in their own future from the consumer's perspective. One of the things that we have been plotting, and we noticed that this plot starts in 2009, and we just want to very quickly explain why. Because between 2001 and 2009, when we did this survey, there were some anomalies, what we thought were anomalies that we couldn't quite explain by virtue of the data. People's propensity to buy certain things and engage in certain kinds of expenditure that was a little difficult to explain. And therefore, the Chamber and Professor Richard Curtin and ourselves, Richard Curtin was the gentleman from the University of Michigan who started with us in terms of the analysis. We looked at the whole situation and said, let's look at remittances and see what impact remittances were in fact having on people's ability to purchase items, which by virtue of their socioeconomic standard in particular, we didn't think they ought to be able to on the frequency that they were. And we found that remittances were playing a very important part in the daily lives of a lot of people, not just low-income persons, but across the spectrum of the socioeconomic platform. What we find now is that in 2020 year to date, the number of persons who claim to be receiving remittances is up to 37% from 33 in 2019. And very interestingly, we want to make the point that when you look at the data from Bank of Jamaica, which was recently published, we will see that there's a direct relationship between the two, because what has been identified is that the remittances, the value of the remittances has gone up. And so, in fact, it reflects in this particular piece of data where 4 percentage points more in 2020 are now claiming to be receiving remittances from overseas, despite the difficulties in the economies from which we do get these remittances, mainly which is the United States, the UK, and Canada. 4 percentage more of the population are now receiving remittances compared to 33%. So we're almost up to a peak, the peak being 38% in 2016. So that's very interesting to note, and therefore probably explains the kind of resilience that the consumers are showing in terms of their own ability to face the challenges that are being presented by COVID, and on top of all the other challenges that they had before. So 37% are now receiving remittances, which helps them to offset their daily household commitments. So we want to wrap up this section and my presentation. In fact, by talking through COVID, and we can't really finish any presentation today without mentioning COVID and the impacts that COVID is in fact having. So let us look at that particular chart. So we asked consumers, well, what is the kind of impact that COVID is having on your own life? And we've got a number of, these are open-ended questions, and therefore what we've captured is what the consumers have said. 30% believe that government should continue to focus on this control of the spread, obviously, because that's one way in which we're going to turn the corner in terms of the impact, the negative impacts that COVID is having. So what's the most significant impact as far as consumers? Salary cuts. 20% say that this is in fact, a major challenge. People's salaries are being cut in order for businesses to survive. 12% report plans to start their own businesses. Obviously, if you lose your substantive job, then what people are saying is that we will then have to resort to forming our own businesses. Very difficult environment, but it is definitely creating the context of consideration for diversifying into something that they can make money from in addition to whatever they're earning on a regular full-time basis. As a result, 17% of the consumers that we interviewed say they plan to hustle in order to survive the impact of COVID-19. So those are the key things that have been highlighted by the consumers in terms of, what COVID is doing, what COVID is meaning to them. What about the businesses? Similarly, 41%, higher than the 30% amongst the consumers, but very importantly and understandably, they believe that government could focus on the control of the spread of the virus, 41%. 62% of businesses are reporting revenue losses as their main experience due to COVID. Very, very significant numbers, 62% of the businesses. 26% have resorted to reducing staff or to cut salaries. Some have applied both approaches. 26% have reduced staff and or cut salaries. Firms that reduced staff did so by 71% on average. And this was up from 45%, which we picked up in the second quarter of 2020. But interestingly, and very, very importantly, 45% of the businesses are optimistic that they will survive COVID. And 81% anticipate that they will recover within the short to medium term, which they consider to be between 1 year and 3 years. So again, recognition of the really key and hard facts that COVID has presented us with: job cuts, reduction in salaries, forcing people to start their own businesses, hustle as a result of the obvious reduction in disposable income. But interestingly and very importantly, and this was something that Tanya made reference to, the resilience of the Jamaican public, both businesses and consumers. They are optimistic that they will survive it, and 81% anticipate recovery of the businesses now within the short to medium term. So I think this is a kind of silver lining at the end of a dark cloud, and I believe that this is something that we should in fact focus on quite a bit. So I think that ends my presentation. I am available here for questions, and hopefully we'll be able to answer adequately any question that has been asked of us and submitted and put to us.
Thank you, Don. Very, very interesting, very comprehensive. I noted a few things to ask you, but I will hang on for a little bit because I want first to give Anya Walker for NCB Capital Markets, Vice President of Strategy, Research and Innovation particularly, a chance to add her perspective, and then we will commence the discussions. Panel participants, please free to write your questions in the chat, in the Q&A section of the chat, and we will address as many of them as possible. So over to you, Anya.
Hi, Andre. Thank you very much. Good morning, everyone. So my presentation will focus primarily on the stock and capital markets and just the performance of companies in general and the correlation of that with the surveys. So what we have noticed from the data is that there's a very positive correlation between the performance of the stock market and the consumer and business confidence surveys over the last 3 years. And we never really looked beyond 3 years, But I think it's something that's worth doing going forward, because typically business confidence is a leading indicator of economic activity. And if you look, in fact, at the screen here, you will see that in terms, and we looked at the change in the first diagram, the change in business confidence and the change in consumer confidence. And we actually found that business confidence actually started to slow from the second quarter of 2019, long before there was COVID. And it actually turned negative before consumer confidence in the fourth quarter of 2019, and negative in terms of the direction of the change. And we also found that the stock market activity, and we use the JSE combined index, its correlation with the business and consumer survey has actually strengthened in 2020. And what we saw is that all the variables got progressively steeper in terms of the contractions year over year. So both in direction of change and magnitude, we saw that movement between stock market activity and business and consumer. So it's worthwhile, I think, that we should look if going forward, and when we come out of COVID, and it's a when we come out of COVID, if in fact the business confidence data will actually change first and be that leading indicator. So it's something for us to watch for. So looking at the results of the survey, the fact that the companies in the distribution and trade sector, manufacturing and distribution sector, that their expectation around investments and the return on investments, that has sort of been consistent with the results from listed companies in the second quarter, and it points to what the third quarter results might bring. And it suggests that the experience is not just limited to listed companies, and it may be more pervasive across the business in that sector of the economy. The sector has also been resilient because of the importance in terms of the needs that it meets for consumers. Positively, most firms anticipate that the economic conditions will be better now than it had been in any time, than it is now the same time in 2021. And this is based mainly on anticipated wisdoms and learnings to be gained by them in terms of how to live and exist with the pandemic. And I think this bodes well for capital market activity, and is consistent with sort of the activity that we saw in the primary markets at the end of Q3. So one of the things that I picked up, and you never really stressed out how much done, is just the business confidence survey underscored sort of the impact that digital transformation is having and the need for companies to adapt. I think the pandemic is changing the way in which business is conducted, not just in Jamaica, but globally as well. And it's also creating shifts in consumer behavior in terms of the way they engage businesses, and some of this may actually be permanent. Because of this, therefore, I think technology is going to become even more vital to the survival and growth of businesses. Our view is that investment in technology will strengthen the resilience of businesses to the change in business and economic conditions, and it could also encourage more technology-based entrepreneurship in the country, which could drive the innovation that is needed to unlock higher levels of economic growth. In terms of our outlook for the stock and debt capital markets, the performance of the stock market is likely to remain low for the rest of the year. And this is in terms of returns, given the recent surge in the number of cases and the reinstitution of the containment measures, because we expect those to weigh on business activity and profitability for the rest of the year, more broad-based terms. Of course, you will still have those sectors that will benefit. And this outlook is basically supported by the results of the business confidence survey, which revealed expectations for near term over the next year profitability declined in Q3, given the uncertainties caused by COVID, and also in terms of what consumers were saying in that they didn't anticipate making major purchases in the immediate year ahead, and there were expectations of decline in income gains. But in terms of the positive signs that we've seen in the primary market activity, so last quarter would have spoken to encouraging signs of improvement in primary capital markets, both debt and equity. And we saw where we actually had an APO from Barita. There was a Tropical Battery IPO and the GHL debt raise. And this is sort of consistent with the climate for investment and expansion, which actually went up by 2 points from 82 in Q2 to 84 in the third quarter. It's sort of consistent with the renewal in demand that we're seeing for financing from the capital market from some businesses. So we anticipate that we'll see more firms coming to market for financing, both debt and equity, whether the equity financing, we expect APOs and to a lesser extent the IPOs. And in terms of debt financing, we actually expect to see both private and public debt offers. I'm borrowing this quote from our head of investment banking, and it sort of puts the spin that we're seeing, even in terms of from the survey results and people saying, you know, they expect positive outturn or an improvement in economic activity over to the next year to 3 years. And his quote is, there was life before COVID and there will be life after COVID-19. And what we have found is that the companies that are more agile and forward-looking are taking this sort of a view, and they're looking for the opportunities in the market, and they're seeking out funds, financing to fund these opportunities. And this is despite the fact that a lot of them actually are seeing a fall off in revenue, but they have a sort of a clear strategy in terms of moving forward and putting themselves in a position, to actually rebound strongly post-COVID. So in terms of the use of funding we're seeing refinancing to reduce costs. I think every firm is looking at their balance sheet, and it's not just in terms of, you know, overhead costs and so on. They're also looking at their financing and looking at ways to eke out cost savings. If they can refinance to reduce those costs, they will, and to extend maturities. They're looking for funding for acquisition of newer complementary businesses, new product opportunities for diversification, and also for business model transformation. So despite the challenges, we believe that the capital market remains a viable option for flexible financing along all tiers of the firm's capital structure. And this is true for government, agencies of government, and corporates, whether small, medium, or large. NCB Capital Markets continues to provide a range on structuring and advisory services for entities looking to tap the capital markets. And also, we are continuing our junior market initiative, which has a range of fees for companies that want to list on the junior market. And we're also looking to establish an ecosystem to support those companies who have not reached the IPO stage but are desirous of listing. So there is that there, and that ecosystem would involve the attorneys, advisors, people that can support the firms that want to list but just need to get everything in order to be able to list and would need guidance to do so. So for the immediate, what we're seeing, just to sum it up, is that generally that the market is more open to those firms with a clearer strategy, stronger balance sheet. They're more resilient, and they're willing to fund those opportunities that they're looking at. On the investor side, there's still a bit of reticence, but I think investors are open for good investment opportunities. Thank you very much.
Thank you very much, Anya. Excellent presentation. And from where I sit, I see as well from a investor standpoint, from a consumer's investors, those who have stayed the course for the most part have been able to hang in there and to capitalize on opportunities in the market now. And from the business perspective, individual companies who thought of listing this year have delayed their decisions maybe by 6 months, but nobody has taken it off the table. And in fact, the pipeline is very deep for individuals looking to capitalize their businesses, as indicated by the survey. 70% say that the business climate won't get worse. So that supports it. And another point is simply that you as the research person can identify and confirm that there are companies listed on the exchange that between March and September of this year have gone up between 8 and 15%. So the opportunities are still in fact there. So thank you very much for that presentation, Anya. I'm going to quickly, I see the questions in the chat, Dennis, and others. I see your questions and I'll soon get to them. But the first thing I want to do is ask Mrs. Turner-Jones, Therese, from the IDB's perspective, the survey results, how does that, is that congruent with what you are seeing in terms of your current position? And where have you been getting the appeals from the IDB perspective, and your own thoughts on the results?
Thank you, Andre. First of all, let me say congratulations to Dawn and the market research, and also to the NCB presenters. This is Tanya and Anya did a really good job of tying the market information along with the business and the consumer confidence results. So this is the kind of conversation that I think is really helpful for the public, not just people who want to invest or the average consumer, but I think also for the government, for if anybody's out there listening, to be able to respond to some of what's happening. So let me just say that, of course, everybody knows that this is the worst thing to hit Jamaica in a long time. And like the PIOJ and the Bank of Jamaica, we are predicting a 10% contraction in the Jamaican economy in 2020. So I think these results align with that. I think the expectations and how the consumer is feeling are all fully aligned and congruent, to put it in your way. Just to step back a little bit to context. So if you think about Jamaica and the main drivers of economic activity, you basically focus on the hotel sector and tourism and all the related activities around that. Not only is it important for economic activity, but it also drives investment, it drives household consumption, and it's a real catalyst for either domestic or foreign investment. So bear that in mind. We know from research we've done on tourism over this pandemic that Jamaica is one of the most tourism dependent economies worldwide. So we expect that this impact is going to be big, and hence that's why for the rest of this year, the projection is still around a 10% contraction. I think what the results of the Q3 survey help to illustrate is not just the near-term implications of the crisis on consumer and business confidence, but also it gives us, as you're asking, some hints as to where we should be putting our efforts and what is it that we've been trying to respond to as a result. I think many of the priorities that have been mentioned in the survey are sort of core to how we work now and what we're responding to. So whether it's improving digital transformation or trying to get the environment for business to thrive, facilitating investment and financial access, I think are really important core activities that we've been focused on since March. And by the way, it's not just Jamaica. I mean, all of Latin America and the Caribbean facing some of these very same challenges. And so it's been sort of core to our work. What I would like to just pick out some of the results. The fact that 28% of the businesses felt that they were inadequately prepared for digital service provision, and it affected their expenditure investment plans. That's really a big insight, because as all of you who've spoken mentioned, technology has really played a huge part in the resilience that some firms have been able to display. And we've seen that. I mean, we've seen some businesses quickly adjust to putting their services online, delivering services to their clients wherever they may be. And that's part of the agility that we need to see, not just in small businesses, but actually big business as well, and in government services, right? We can't underestimate the role that government services also play in keeping economic activity not just moving, but also facilitating the private sector. Many businesses also report that they not expect an improvement in the economy or their financial performance over the next 12 months. I think that's pretty much consistent with what we're hearing around the world on this pandemic, because all of us are kind of really groping in the dark for solutions. As this crisis gets longer, as the crisis deepens, we really have to knock our best minds together as to how we can help not just businesses, but consumers, households, students, I mean, children who can't learn online. There's some 400,000 kids in Jamaica who don't have access to learning at this time. We have to really figure out what we can do to help. It's also worth noting that when asked to rank the most critical issues that they face, businesses highlighted crime and violence as the #1 problem facing the country. That seems to be like a consistent indicator in every survey for the last many decades in Jamaica. So insecurity still remains a big issue, a big preoccupation, not just for businesses, but also households. We have to figure out a way to fix that. And it's one of the areas that, you know, the IDB has been involved in Jamaica for the last almost 20 years. I don't think we have, again, all of the solutions yet, but it's really worth focusing more energy and attention on how do we prevent crime? How do we help communities become more peaceful and less violent? And there are a whole host of social interventions, I think, that can help the government think about improving security in the country. Businesses also flagged high unemployment and poor health outcomes as among the other key challenges. We haven't talked much about that yet. And I agree. I mean, if you think about this, you know, this dictum, the health of a nation is the wealth of the nation, it's really important that the infrastructure around health in a pandemic is the one that's adequate to the problem. Fortunately, and this was before the pandemic struck, we've been involved with the Ministry of Health in a major operation to improve not just the health information systems, but also improve the infrastructure around the Spanish Town hospitals and focus on non-communicable diseases, NCDs, that's a mouthful, especially with braces. But I think looking at you know, the profile of the health of the average Jamaican and finding ways to improve those outcomes, I think will help in the long term. To make sure that productivity is not affected because people are ill or people are affected by COVID. And by the way, the projections and the forecasts around how many people could be affected by COVID is not a pretty one, right? So if the Minister of Health is correct that possibly 1.5 million people in Jamaica will get affected by COVID, that could have a very bad knock-on effect for businesses and for the labor market. In summary, I want to say, like Dawn, that these are pretty sobering results. I think they align with what we know of the empirical data around the economy and what's happening. I think what's missing from the discussion today, and I was trying to, talking to my economist who's in Washington at the same time we were having this chat, is what's happening on the public sector side. What are we actually seeing in terms of government revenue and how the government is able to respond in the situation? We know that there's been a significant package to households as well as to small businesses. We think that's really important because everything I'm reading now about cataclysmic economic situations like this pandemic is wrecking all over the world, is cash really helps. So getting cash into the hands of people that need it, I think is really going to be important. Finally, I want to say that why I think there's a lot of value in this particular survey is some of the qualitative responses that came from the survey. So people are thinking more about digitalization and seeing that as a route out of this crisis. More investments in health, more investment in education, more investments in citizen security. And of course, we're involved in all of those areas. I just want to say I'm really pleased that you chose me to be a participant on this panel. I think for the public, this is amazingly important discussion to be having. And I'm waiting to hear what the public is actually anxious to hear from us as a panel. So if we can get to those, that would be great. Thanks so much.
Thank you. Thank you very much, Therese. Yes, definitely. There are some questions coming in, but I definitely want to get Hugh's perspective on small business. Definitely. And I noticed, Therese, I'll come back to you on this, but the slide that shows the sector that is most likely to be investing is agriculture. You didn't say much about that, but we can come back to that. But I noted definitely that you wanted to see some health interventions as well. All right, Hugo, over to you, sir. Can you just give us your take on what you saw and what is happening on the ground with small business in terms of how we're going to get ourselves out of this and what you see as the critical takeaways from the survey results?
Thank you, Andre. And may I say thanks to the sponsors and JCC for putting together a program like this. It's well needed and we welcome it. And thanks to the other persons who participated in this program. As it relates to my takeaway from this survey, going through the survey has revealed what we on the ground have been experiencing all along. It's not strange to us that these figures pop out at us because we have been experiencing them on a daily basis. And hence we're happy to see that there's an uptick in agriculture as it relates to investment and new trust and new drive, even though from a small business perspective, we think a lot more needs to be done to facilitate. If you look back on where the government has established some time ago a growth council, which we commend the government for that and even their ambitious projection. And the chairman of that some time ago expresses disgust, his annoyance with bureaucratic bundling across government agencies. So as Teresa just rightly pointed out, that one of the moving forward to get ourselves out of where we are because of this pandemic, we didn't call it upon ourselves. So we have to hold hand and heart together to get out of it. As it relates to the different mindset in the government agency to facilitate forward movement. The report also points to the digital arena where companies have been pivoting, companies have been resetting their operation in the digital space, which we welcome and is a must because of where the world is going. But one area of disappointment for us is we look on the digital space, but we choose to neglect digital currency. BOJ is silent on it, the government is silent on it. Financial institutions have gone there, but in a piecemeal way that facilitates the interests of the institution and not really the greater population. And there we segue into growth, but equitable growth, because unless we, IDB has done study on this and has published papers, other agencies, World Bank, and even we can take, for example, look on the Sweden model, how they have moved significantly into the digital space. And we are going there, but we have chosen to neglect digital currency as a way of heading there pretty fast. So private sector, as it relates to service providers, government agency, need to be able to look seriously there, because we must institute ways to live with COVID, because as far as we see, it's not going anywhere soon and we must survive. And we are a resilient set of people. only the opportunity and the facilitation we need to be able to move in a serious way to capitalize on these tragedies and not to waste a crisis. I would want to look further on some of those new or the reset that we so speak of into the social challenges. Teresa spoke on those two, and we should highlight them as much as we go forward through collaborative effort, private, public partnership. We must also focus on the green recovery because the environmental impact is of serious concern. We are not, especially in this region where we are surrounded by the sea, and we are not blessed with vast abundance of land. We need to treat our environment better. So government need to step forward with serious policies to address those concerns. And at the end of it, when we would have come through on the other side, we would see that it was a blessing in disguise for us to reset, refocus, re-strategize, and move forward, including the financial institutions too. Thank you.
Thank you, Hugh. One quick question from the small business, for those who came in late. Hugh Johnson is the immediate past president of the Small Business Association. One quick one for you. What would be, from the small business perspective, the one must-have that you would need, the group would need in the next 6 months to come out of this?
One, to be able to have access to equity financing, like we have been working on years now, the micro stock exchange, because you would have seen through this crisis, the stock exchange is still doing well. We would like to have that micro stock market so that we can engage equitable financing instead of loan financing as it stands now.
Thank you very much, sir. Very good. So we heard of social intervention, green recovery, and a micro stock exchange. I anticipate, sir, that within the next 12 months, you're going to see these things happening one way or the other. Maybe not all at the same time, but when you also mentioned digital currency. I believe all of these things are on the table, and because of where we are now, these things are going to come to the fore very, very soon. So thank you for your input.
I'm hopeful.
Sorry, I was muted. I'm sorry about that. Yes, I'm saying that within the next 12 months, I anticipate that you're going to see 12 to 18 months, some of those things that you asked for, Hugh, coming to the table. More social intervention, private-public partnerships, green recovery, the initiative to develop the micro exchange and digital currencies. All of these things need to happen, and I agree with you, and I expect that you're going to be seeing them in the medium term. Don, I was suggesting that there was a question asking you to go back to the slide that showed why the conditions would get better in the next 12 months. So while you go back to that slide, if you could share it, there's also a question concerning the analysis. This is from the chat. Between companies and their responses, do SMEs respond differently to larger firms in the various, or are they incongruence? And if possible, is that, I know the breakdown is not available in this presentation, but certainly I believe you do have that information.
The first question was, again, can you repeat for me?
What are the reasons why persons are suggesting that the conditions will get better in the next 12 months. That would be the slide. Yes.
All right. So we asked the question of both sectors. We talked to the consumers first and then the businesses. So here it is, the responses that we got, and these were all unsolicited verbatim comments from the people. They felt that the pandemic will be contained or controlled, so that they see a cutoff point. They don't know when, but they believe that this is one of the things that will engender an improvement in the economy and how they see themselves and how they see businesses. The pandemic will be contained or controlled. They also believe that government's efforts and plans will make a positive difference in how they see the economy and how they see themselves, right? They didn't detail what those plans were, but they believe that government is making the kind of effort to cauterize the fallout, and they see this as a positive that will engender and will make for an improvement in how things will be over the next 12 months. Thirdly, they believe that they will learn how to live with the virus by then, meaning not individually clearly, but that as a nation, we will know how to better manage and better cope with the virus by the next 12 months, within the next 12 months. And as a result, they see the economy reopening or widening the opening of the economy, and that things will eventually bounce back within the next 12 months. So these are the reasons why the consumers are positive about the economy and their own future over the next 12 months, right?
Thank you.
If we go down to the businesses, why will conditions be better in the next 12 months? Again, they think it's all about putting in place the strategies to better coexist with the virus, because what this says is that they expect the virus to be around, all right? But that they'll be better educated and they'll be more equipped to deal with the virus and therefore to better coexist with the virus. Coexist, they feel they must. Also, they think that there will be a vaccine for the COVID which will become available. I'm not quite sure, and there's no more detail as to how they see this as a benefit, but I imagine they believe that this will probably stabilize the number of infections, will taper off perhaps, and that as a result, they see a vaccine as being perhaps an important element in their own mindset as to what would happen over the next 12 months in terms of businesses. The others are related to their own performance. So what they intend to do is to go into other products. They intend to diversify, obviously. They're saying that we can't put our eggs in one basket anymore. We'll have to diversify and use whatever technology there is to be able to get into other products and to market other products. They see also an improvement in their marketing efforts, and they will be in fact developing other internal strategies that will help them to weather the storm and to come out of it, out of the thunderstorm, so to speak, into clearer skies. And as a result of all that they're doing, all the things that they see happening around in the environment, all the things that they intend to do internally, they believe that there will be a greater demand for products and services. And hence, these are the primary reasons where they see the conditions being better in the next 12 months.
Okay. Okay. And the other question, which I think it was Dennis who was asking, is that the responses between big business and small business, are they the same, or is there an availability of a difference between the responses to the same questions for a small business versus a larger business?
Sure, thank you, Andre. The answer is that yes, the data is available. It hasn't been plotted for the presentation purposes, but every question would have been analyzed in terms of small versus medium size, because we looked at different industries, and therefore the data certainly, first of all, is available by industry type, and would be a breakdown, could become available by small business versus large businesses.
Okay. All right, thank you. Larry Watson, past president of the chamber and our chief statistician in-house, has a question and comment actually.
Okay.
COVID is now the #1 issue affecting business and consumer confidence. Crime, which was previously the #1, is still significant. Foreign exchange rate stability was mentioned as still being a significant issue. When one considers the BOJ marketing program on inflation targeting, which is being met, how does this reflect on the success of understanding inflation targeting program? Is it reasonable to think that consumers and businesses are not accepting inflation targeting and are still watching exchange rate fluctuations? And so he's talking to the significance here of, in the survey results, of exchange rate fluctuations, as opposed to how that concern has manifested itself even in recent times.
We could trust Larry to ask a difficult question, right? But let me see if I can answer it. The key factor that we talked about, for example, in the last 2 or so quarters, not including this one, is the whole question of the extent to which the dollar has been fluctuating. And what that has meant is that it has made planning, long-term planning, far more difficult. Now, along comes COVID. And obviously, this has made the situation that worse, because you can't obviously predict the kind of impact that COVID is having. We know what it is having. We know from the data that it is resulting in job cuts and job losses and so on. But this is compounding the challenge that is faced by companies in terms of their forward planning, by virtue of not being able to know where the dollar is going. Now, you may want to contend that there has been some amount of stability in the dollar in the last 2 months or so at a pretty high level. And that should be a better situation for the businesses to deal with. Prior to that, we had the dollar moving like 5 and 6 percentage points over 2 weeks, up and down. And that was really a major difficulty. So I believe that businesses are focusing to a large extent on the fluctuation of the dollar. Now, I think it is a little easier for them, as I indicated now, less difficult, one should say, than it was 2-3 months ago when the dollar was up and down, you know. But I think that probably is more critical for them than the whole question of inflation targeting. That is something that is more, it's closer to them in terms of their day-to-day activity and how they execute their functions. Yeah.
Indeed. There's a question.
Inflation targeting is more long-term. Yeah.
More long-term, right. There's a question here, which I'm going to ask Therese to take a look at. But Therese, before you go there, I wanted to hear about, given the agricultural sector leading the way in terms of investment plans, what is have you seen in your book in terms of the request for project support? That is one. And then there's a second question here about what project funding is available for retailers in marginal communities who have established and faithful markets. You can touch that one, and then I'll ask Tanya to take it after.
Sure. So on agriculture, I mean, if you look at how the GDP numbers for Jamaica, how it's the methodology behind the GDP data in Jamaica, agriculture still has a heavy weight in the overall calculation, because you're looking at, you know, domestic value added, and agriculture does a lot of that. And if you look at movements in GDP in Jamaica, they basically ebb and flow with agriculture. And it's not just because of the number of people, but it's probably a lot of that has to do with the number of people working in agriculture, something like 250,000 farmers at one point. But it's also, you know, the size of the sector relative to other sectors. Tourism, by contrast, is about 30% when you add in direct and indirect. So that's also a big number. And the heavy weight we're seeing falling on GDP for the rest of this year and throughout 2020, it's just the absolute collapse across the board in almost every sector in Jamaica, right? So we see, if you would note, some of the positivity from businesses around which ones are growing, which ones feel like they're more optimistic. A lot of that is around the food and the retail trade, because almost every other economic activity in the country is at a standstill. So what are we spending money on? We're spending money on food because we're home, kids are home, we're eating more. The fallout from the tourism industry, all of that agricultural produce that were, you know, funneled to the North Coast, have now found themselves in markets all over Kingston, and that wasn't available before. And I think that's been a big stimulus to farmers to keep their production going. So I think that's been a very positive thing. We haven't seen on the private sector side of the bank any demand for finance for agriculture from private sector players. But we have seen, and we have in negotiation with the government of Jamaica still, a small agricultural loan to do more work on improving agricultural markets in Jamaica. So I would say from a policy level, more needs to be done to help the agriculture sector become more efficient. I think the sector still relies too much on government support, whether it's irrigation or roads or finding ways to get the products to market. And I think there's a lot more that can be done policy-wise to get agriculture to be more efficient and improve the outputs from that sector. I'd like to see more requests for loans from the private sector to do more interesting things in agriculture. You know, we need to move away from thinking that agriculture can only be done, for example, in a field, because in large metropolitan areas of Jamaica, there's no reason why we couldn't have more greenhouse farms, for example, or different ways of growing produce that people need in different conditions. And this is becoming even more and more important as climate change becomes a big factor in agriculture and how it affects output and yields. On the point about resources for marginalized communities who are small retailers, entrepreneurs, you know, there have been, through the government support for small businesses, I don't know how many of these small entrepreneurs have been able to take advantage, but there are ways in which they can get some support through the Development Bank of Jamaica and through the financial institutions like NCB, through the credit enhancement programs that we have, financed by the IDB. So providing cheaper resources to the banks to then on-lend to small and medium entrepreneurs. So I think resources are there. That doesn't appear to be, it's always mysterious to me why small, and Hugh may know more about this, and this is a long-standing issue in the country and in this region, how to get small businesses and entrepreneurs to access finance more equitably. And I think it involves a whole host of things, you know, building up the business acumen of small business holders, trying to help them put together a proper business plan, making sure they keep good business records, because if you go to a bank and you can't really prove what your revenue stream is, it's very difficult for the bank to say, well, you seem to be a good bet. So, I mean, I think there's a lot to support this sector. And by the way, we have a big program with the government of Jamaica right now to do that with the Development Bank of Jamaica, looking at the whole ecosystem around, whether it's venture capital, angel investing, putting together funds so that, innovation funds so that entrepreneurs can have access to financing to get their ideas and their products to market more easily. Okay. But I think it's really, it's difficult if you're one of those business owners, small, and you don't have the right way of documenting what you're doing, how you're doing it. And this is why it's really important to keep good records, develop a relationship with the financial institution to build up the track record.
Thank you. Hugo, a question came in by text message to me personally, asking, what is the Small Business Association doing as a body to lobby the financial companies for more on-the-ground support, especially small and micro? That is the first part. And then after your answer, I'd ask Tanya to speak more to what the financial institutions doing and anything new and different concerning onboarding and some of the things that Terry spoke about.
Thank you, Andre. From a small business perspective, for the last 3 years, we have been having business training because we were anticipating by now that we would have had the micro stock exchange operating. We had gone ahead trying to help small enterprises to do better business by having good corporate governance structure, proper accounting principles embedded in their operation from early. And we still need to do a lot more of that. And here's where we seek governmental help in enabling agencies like JBDC with the proper resource to be able to do more of that, because business training is one of the key area, not so much financing. I think the last survey I had seen, financing was third on the list, but proper business training was the number one hurdle preventing small operators from scaling up and doing better business. If you notice too that for over a year now, the PSOJ had engaged the financial institution, and we have been having dialogue and having a program to help to bridge that divide. It's long in coming. It's difficult, but we are working on it and hoping for it to start bearing fruit in the near future. But those are some of the things that we have been doing from a small business perspective to get our constituent to understand the importance of good business principles in moving your business forward.
Okay, thank you. Tanya, have anything to?
I actually think that you covered it perfectly well. I mean, I think one of the key elements is ensuring that small businesses have, you know, that whole thing, that whole matter of developing capacity. Capacity covers many things, but I think very fundamentally, it's ensuring that small business operators, you're operating a business, so you need to ensure that the framework around which you've established and are running your business are based on sound principles. So you need to ensure that businesses understand the environment that they're operating in. They understand how to structure their businesses in a way that make it sustainable. And important in that is understanding a lot of the elements that come together, including record keeping, financial reporting, building up your strategy in a logical manner, which ensures that you understand all the different elements that impact on your business and how to navigate in that context. Financing is an important element in the sense of providing you support to be able to finance some of the activities, absolutely. But at the core of it is understanding that you are operating a business, and to operate it sustainably, what's the infrastructure that you're putting in place to ensure that you can maintain sustainability of your business.
Okay, thank you very much. Don, there's a question here. There's a couple of questions here concerning, one is asking what's the methodology for testing the statistical significance of the results, which I think you should be able to take that one. And then the second one is, which is a good one, the survey mentioned in terms of diversifying economic activities, it mentioned persons are considering a hustle. Somebody wants you to give us a clearer definition of the type of persons you spoke to and the type of hustles that they were speaking about. Don, I don't know if you're unmuted. Not seeing him. Are you there, Don? All right, get back to Don on that one. Another question here is, again.
Yeah, I'm back with you now, sorry.
Okay, go ahead. So the question was concerning what is hustle? What kind of businesses, what kind of persons you spoke to?
We use the term not only advisedly, but because this is how they actually coined the phrase in terms of what they're now trying to do to make ends meet. So what they're doing is buying and selling to a large extent, all right? Now, this primarily engages the middle to low socioeconomic group, but it really means that what they're doing is finding ways to bring things in or to find things to buy and sell, to unsell to customers, right? So it's a kind of hustling mentality, if you wish, where people are just trying to generate income for themselves, revenue for themselves by virtue of selling things that they acquire, you know? So I hope that explains it, right?
Okay.
Because in essence, what they're doing is actually trying to find means by which they can survive to meet their daily expenses. So in addition to their core job, if they have one, they're now trying to build upon that by finding things to buy and sell. Buy and sell is probably the best way to describe it. Right?
Okay, so retail trade.
And right, and retail trade,
Right.
retail trade. And they're talking about small items and big items, whatever they can find that might be attractive and that might actually fill a demand that people have. And it's becoming a pretty difficult engagement, but this is what they're doing to actually shore up their situation on a day-to-day basis. Right.
Right. And the other question about how are the numbers tested
The
for statistical significance? Yes.
Oh, well, we do all of this internally. I mean, first of all, we go through a very thorough validation procedure where we actually check back with respondents to make sure that people are interviewed in the way that we have designated them and we have actually commissioned it to be done. All right. And then, internally we do all the kind of statistical tests, which of course ensure the reliability of the data. But it does start with confirming that the data was in fact captured in the way that it ought to have been. And this is something that we do as a matter of course for every single project that we do. And we do have our standards, which we obviously, would not speak too much about on this platform.
Yes, yes. Tanya, a question about the process for application for financing. Has there anything been done to simplify the process and to rely on the credit bureaus more in order to fast track or to reduce the bureaucracy that would go with, that reportedly goes with applying for financing from a small business perspective?
All right, so you're asking me a very big question that I I'd have a difficulty responding to in a fulsome way here in this forum. But what I will say is that there is ongoing work. What you'll find is that over time there have been changes, and we are looking at our processes and seeing where areas where we can simplify and modify where applicable. And we have to do it in a context, right? So at the end of the day, you can't come with no information. We must have information on which to assess. What we're looking at is what are the ways in which we can modify so that we're not making decisions blindly, obviously, but what we're doing is we're looking at the fullness of the information that is potentially available to us to determine if there's an assessment that we can make when we pull it all together in a slightly different way. So there is ongoing work. I wouldn't be able to detail that right here, but certainly there is ongoing work in that area.
Okay, thank you. Don, there was a question before, which I'm just trying to backtrack on it here, concerning Christmas. You did mention what the expectations are in the short term, which I assume would include Christmas, but I'm wondering if a specific question was asked of businesses and consumers regarding their expectations around that particular activity from a commercial standpoint.
Is that directed at me, Andre?
Yes, Don. I was wondering if there's any questions specifically addressing the retail Christmas retail period from a consumer or from a business perspective. Did anybody give any feedback on that?
Not that would be statistically significant. It may have been mentioned, but there was no particular question which sought to get people's perspective going forward over the next 3 months to Christmas.
Okay, because I anticipate that just analyzing what we saw here, it seems that some people are willing to sacrifice the commercial expectations of Christmas in order to have a brighter first quarter.
Well, I think the point that really needs to be made is that there was a preoccupation with COVID and getting through the next week, So I don't think there was a lot of focus on what's going to happen at Christmas or over the next 3 months per se with Christmas in mind. It is really how are we going to deal with this whole major pandemic and, in a way, ensure that our businesses survive through the process. I don't think there was any major focus. There certainly wasn't any clear indication from the consumers or from the businesses that they were focusing on what was likely to happen for Christmas sales or Christmas purchases.
Okay, thank you very much. Any other comments from the panelists as we approach our wrap up? Before I move the vote of thanks, if there's any other particular comments from any of the panelists at this time, or any last opportunity for anybody to write in a question.
Sure.
Go ahead.
Andre, I just wanted to pick up on Hugh's point about digital currency. And I think what Hugh was, I mean, I want to extrapolate a little bit. I think a digital currency will eventually get to Jamaica the way it's spreading around the world. But just to say, before we have a digital currency, a lot of other things have to be fundamentally right? But the whole issue about digital transformation as a concept to transform Jamaica and to make it more efficient and make things easier for that person who is asking about, you know, a small business in a marginalized community, how do they navigate these times? You know, if we think about the absence of cash as a means of transaction, it probably, despite what I said about giving people cash as a way out of this pandemic, when I say cash, I'm not talking about literal cash, but I think if we were giving people a debit card that had whatever amount of money stored on it and they can spend it everywhere that they shop, I think we would find that the impact, especially on poor households, would be much less than we're seeing now. I think the digital currency issue is a very, very important one to have. Bahamas is exploring a digital currency. Other countries around, Barbados is in our region. And so we need to keep abreast of that. I think before we have a digital currency, though, I'd like to see a digital ID. Everybody knows that the IDB is working with the government on a national identification system. That's important on so many levels because there's so many people who are excluded from financial institutions. I mean, Tanya's response about, you know, what is needed for access to finance, you know, a lot of the hurdle is just determining who you are as a person. And we need a way to identify Hugh Johnson from Don Anderson that is irrefutable. And that can be done through a digital ID. And I think every Jamaican deserves to be counted as a member of this society and economy and participate. I think it will make life a whole lot easier. And so I'm looking forward to that happening. Just lastly, I think something else I want to pick on from Hugh, he mentioned sort of, you know, looking into the future and focusing on the green recovery. I think that's really important because the future as we know it is going to be quite, well, the future as we don't know it is not going to look like what we may have been thinking about the future, say, a year ago, meaning it's mostly tourism or it's mostly agriculture, it's mostly whatever. We just don't know because of what the world is experiencing with this pandemic. If you follow reports from businesses all over the world, they're not going to be taking on the same number of people to do the same tasks that they were doing before. So job losses are going to be inevitable. People may not eventually return to work on a full-time basis. At the IDB, believe it or not, we are still not working out of physical offices. And when we surveyed our staff, most of them here in Jamaica, and I was shocked by this, do not want to come back to the office on a full-time basis. They'd much rather work maybe 2 or 3 days at home and then 2 days in the office. So I think we have to be prepared for a new normal, as we're calling it, across a whole range of activities. We have to adjust, we have to adapt, we have to put things on a digital platform, and we have to look for the creativity, which is so ample in Jamaica and across this region of new ways of doing things. So the resilience Don started or ended his presentation with, I think it comes out clearly in the study. And I think people are, as human beings, we want to be hopeful. So we're not going to say things are not going to get better. They have to get better. They can't get worse. So I think that's all good. And that augurs well for the Jamaican economy and society for the future. Thank you.
Thank you very much, Therese. We, on that positive note from the IDB boss, I believe that we can bring a wrap to this. I think one of the things, Don, we need to definitely spend some time on, given our over dependence on the tourism sector, which is now evident by the fallout in that sector. We need to kind of spend a little more time talking to the individuals in other industries about their plans for development. And I'm happy that we included that slide a couple of quarters ago about what sectors are looking to boost up their investments, and agriculture has come out on top this quarter. 2 quarters ago, I believe it was construction, if I'm not mistaken. So certainly from the development perspective, the investment and commercial bankers among us should also double their efforts at offering opportunities to other sectors of the economy, just so that we have a better balance and we're able to withstand shocks a little better. This has been a very good session. I thank our sponsor, NCB Group, NCB National Commercial Bank, NCB Capital Markets, valuable input. And I believe that our panelists as well have definitely added significant input to the discussion. Thank you to Market Research Services Limited again, Don Anderson and his team. Thanks to the technical team from the social media management side. Thanks to all the participants online, YouTube and Zoom, and to my support team at the Jamaica Chamber of Commerce, led by Andrea Waite. Thank you all very much. I think this has gone very well, and we look forward to further discussions. Don, we will talk further. Thank you very much.
Will do.
Okay. Have a good day, everybody.